It's interesting. I'm looking for where the jobs are, and you keep telling me that people are not hiring, which is quite sobering. Charles, what do you make of that?
Well, it's not a surprise, and of course, for a lot of these small businesses, according to someday like NFIB, they just can't afford it. Even the ones who want to hire, they've been priced out of the better workers, and they were for a couple of years now overpaying for people who really weren't qualified for some of those jobs, but they had no choice. I think the temp workers here is a red flag. I love the fact you have 532,000 people come back into the labor force. But again, I think the most important thing is there's an asterisk here, and I'm glad Alfredo pointed it out. First of all, private sector jobs. Even on that JOLTS report, you see that the headline was like 8.3 million something, 7.7 million private sector. We need to call out private sector from this government. The government has got a finger on the scale and is skewing everything. Steve has made the point over and over again. I agree 1,000%. This is an okay jobs report. It came in better than expected. Doesn't make it great. Those kind of accolades, I think, are incorrect. As far as this rate cuts, I'm watching this very closely, and I know Livornia is into this big time as well, all these rate cuts. So early on, a knee-jerk reaction was yesterday. It was a 55% chance of a 25 basis point cut in March. It went to 50 basis points. Now it's moving back up to 52. We always get the knee-jerk reactions. I think we'll know better by the close of the market. And I think by the close of the market, some of these green arrows on yields will be maybe less green, and the red in stocks will be less red. Cheryl's got some.
Well, I've got more numbers, Maria. You've been asking about where the job creation is, and I have it for you. And in particular, you mentioned this, Maria, is healthcare. That was 77,000 jobs that was added in healthcare, and that was a very strong number. Also, you mentioned the strikes. We talked about the manufacturing side of it, but as far as the SAG-AFTRA strike and that resolution, that added 17,000 jobs. You saw that big on your screen just a few moments ago, that big hit to retail trade. That's 38,000 down. But then another one that I just found, leisure and hospitality had been mentioned earlier. That was 40,000, mostly though it's food and drinking establishments. And then within the government jobs numbers, those weren't federal jobs that got added, Maria. It was actually state and local governments that added the bulk of the government jobs that were added. So, again, if you say the devil's in the details here, there you have it. But I think that your perfect point, though, is those healthcare jobs. That was the biggest, strongest piece of this report, in my opinion.
Well, thanks for going through that, Cheryl.
Maria, can I add something about that?
One second. When I look at these numbers and when I look at where the jobs are, actually, I'm not very impressed with this report. Okay, 199,000 jobs created in the month of November sounds great, but look where the jobs were. Healthcare, we know that that's going to be a strong area. That's where the job creation has been last couple of years. But a lot of jobs came from government. A lot of other jobs came from people returning from strikes. Retail is a lot of times is temporary. So I am not impressed with this number, even though it is better than expected. Steve Moore?
Yeah, that was exactly. If you put those numbers up again that you had on the screen, or this one, look at
the
that.
Government,
so
99,000.
Yeah. Exactly. Plus, I mean, look at education. That's, if I can read that, 100, close to 100. What is that number? 100,000 on the education, and then on the healthcare. So these are those. Think about this. Who pays for the healthcare system? Mostly government. I mean, the healthcare system is half government. So education, who pays for education? Government. So we have, what I'm saying is, we're not seeing the growth of the economy in the sectors we want. We want to see people making things again in America. We want to see our technology sector continue to grow. And why is this growth so focused on government? Because we have the most irresponsible fiscal policy maybe in American history right now. In recovery, we've still got the government borrowing $2 trillion a year. And so the government, and by the way, one other quick thing, the government is what's directing a lot of this investment. Look at all the massive amounts of money they're wasting on green energy projects that are going bankrupt. Charles, it just drives me crazy, this misallocation of resources.
Well, it's a good point, and now you see the market is digesting this and figuring out what we figured out as well, and that is, sure, it's okay. It's good to see job creation, but where the jobs are, not good. John Lonsky, your thoughts of now this market is down 17 points after having sold off better than 100 as Wall Street and investors digest the fact that, well, you know what? It's not that great after all.
Maria and Cheryl, you're both spot on. This employment report suffers from bad breath, B-R-E-A-D-T-H. That is, we just don't have a widespread distribution of jobs growth. If I just take a look, okay, government up about, what, 50,000 jobs, and I add to that 100,000 jobs added in private education and healthcare, another 30,000 coming from leisure and hospitality. My goodness, I mean, I'm looking at about, what, 180,000 jobs that are coming from only 3 sectors, and that accounts for almost the entire 199,000 new jobs that we had for the month of November. This grossly overstates the health of the economy.
So, Joe Livornia, how does 2024 play out in your view from a macro story? Let's talk about the new year as we are now closing in on the year here. Couple more weeks.
So demand is slowing, Maria. Going into today's data, if you looked at the payroll concept adjusted household numbers, in other words, if you took the household numbers and made it like the payroll data, household was saying that the payroll data were overstating jobs by about 2 million, huge number. That's also consistent with the income side of the economy, which actually shows no growth in the past year. So as John was alluding to, I don't think there's a lot of breadth. There is some fundamental weakness. That I expect to continue. I also expect the inflation numbers to soften. We're seeing a big drop in commodity prices, which, by the way, led to big Passover spill-through effects into the rest of the CPI. That's reversing. So I look for the Fed to become more dovish on a much better inflation backdrop, and then ultimately to cut, and perhaps cut a lot, in response to what will be negative employment, because, as I may have mentioned earlier, the construction side of the economy is still way too high relative to where rates are, and you're looking potentially at 800,000 job loss just there alone, which itself would push the unemployment rate up about 50 basis points. So while this has been a long time coming, the general downward momentum will persist. The Fed will have to cut.
So when will that happen, you think?
March is still a decent bet. I mean, it wasn't 77% as it was earlier in the week, but if the probability gets down around 20-25%, I like those odds. So I'm going to stay with March.
All right, March, a cut in rates is coming. Steve Moore, do you agree with that?
Well, one thing I feel very strongly about, and I feel like it's the reason God put me on this earth, is to counter this idea at the Fed that growth of the economy is somehow inflationary, and that when more people are working, that causes inflation. I mean, it's just such a 1950s idea that is so old-fashioned. I want to see as many Americans get prosperous as possible. I want to see as many Americans working as possible. And by the way, Maria, let's not forget, we still have 5 to 6 million men that are of working age that are not working, that should be working. We don't know why they're working. Maybe it's they're getting these government benefits. But the answer to your question is there's absolutely no case for any more increases in rates. I don't want to slow down this economy. I want to see it to continue to accelerate, but accelerate in the right industries.
Of course. Look, Alfredo just said it. He went through small business, and small business is unwilling to hire because of so many reasons. First of all, you don't have the demand out there, Alfredo. Is that right? And number two, you've got all this regulation coming at these guys. They've got to ensure that they're going to have a profit, so they've got to cut where they can.
Yeah, that's absolutely right. And we have to add to that, Maria, the credit crunch that they're actually feeling. I mean, we are talking, about possibly a quarter rate, half rate cut increases, but these small businesses, if they can get credit, they're paying double digit. They're paying double digits, so much more than they've ever paid before. I mean, this is a real issue. So that's why they're not also hiring, because they don't even have access to credit anymore. And this is the concern why we think we're going to continue seeing a slowdown. And this Bidenomics, quite frankly, I'm giddy the fact that the president was going around all year trying to brand this disastrous economy as a Bidenomics, because as we go into 24, we're going to have to decide whether that was the worst branding decision or the rollout of New Coke 20 years ago.
Yeah, great point.